You've heard it before, you're gonna hear it again. The rental crisis here in Australia is pretty bad, but it's about to get a whole lot worse. And we haven't seen some of these numbers since 2008. And we know what followed after that, it was the GFC. This isn't a video to scare you, it's more to inform you about what's actually happening and why we need to open up our eyes and ears when it comes to the Australian property market. If you're interested in what my thoughts are, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Just when we thought there was a little less pressure in the rental market, vacancy rates started lifting a little bit, we've now come down and we've not seen these levels since 2008. The latest rental vacancy data from SQM Research showed the national vacancy rate fell by 0.5 percentage points in January. Now here's the real kicker. The number of homes available to rent across all of Australia has dropped from 47,336 to 31,822. That is absolutely absurd. And when you think about how big of a difference this makes, and if you're looking at rental properties in your own area, I want to know, is it true that you have no properties available and the rents are going up? Comment down below where you are in Australia and what's actually happening out there. Because this is absurd. I've seen it already in the local area I live in, and I know that this is only gonna get worse. Why? There's simple things to it. Number one is we don't build enough homes, and two, we have far too many people coming into the country. Now let's dive in a little deeper around the statistics and data and what this could mean for you as either a property buyer, a rent investor like myself, or someone who's just renting out there. Now the headline here is afford just 2% of all rentals. Australia's rental crisis laid bare. Now PropTrack has just released its 2025 rental affordability report, and to be honest, it's not great news, with renters on the whole facing the toughest conditions we've ever seen in Australia. Now you've been warned, the story is not going to have a happy ending. Well, I'm an optimistic dude. We're gonna approach this and we're gonna figure out some strategies so we can get out of this mess, at least for ourselves. I can't do it at a government level because they would never hire me, I don't think. Now in Sydney, New South Wales tenants have been battling the worst rental conditions on record after the share of rental homes considered affordable for average income earners dropped to a new low over the past year. PropTrack's latest rental affordability index revealed a household on the median income of $116,000 a year could afford just 26% of the rentals listed on realestate.com.au over July to December. PropTrack noted that this was the worst affordability measure in the 18 years since rental affordability records began in 2008. Those on $70,000 a year, placing them among the lowest third of income earners, could afford just 2% of the state's advertised rental stock, the index revealed. Now that's in Sydney. It is the most expensive area in all of Australia, and this is where I think we need to just take note of where we're at. I was born in Sydney, I've lived here my entire life. I can see how prices have been absurd when it comes to prices for not just rentals, but the Australian housing market in Sydney at least. But that doesn't mean you need to live in Sydney. And I know this is a controversial topic, but if you've got family and friends, you've probably seen over the last couple of years, people moving out. They've probably moved up to the Central Coast, they've moved out to Queensland, they've also just moved out of the country altogether. I know it's a sad situation, but life is really unfair. And that's why I urge you, for the last 5 years I've been coming out on this channel saying you need to take accountability for what you can control. What are the things you can do versus just saying, well, that's what the government did. They introduced so many immigrants and they're not building enough homes. Oh my God, I can't do anything. What you need to do is go, okay, is there a way I can increase my income or reduce my expenses? And if that means you can take up side hustles, you could potentially move overseas for like a year or two, gather up some savings, be able to get into the property market by purchasing investments rather than just the dream home or a unit or whatever you can afford in that area, you're gonna find that there's actually ways to growth hack your wealth. If you want more ideas around how growth hacking works when it comes to your wealth here in Australia, definitely comment down below growth hacks with Ravi and I'll make that video for you guys. Next up we have Melbourne, which is Victorian renters are facing the toughest conditions they are in 15 years, with barely half of the homes advertised in the second half of 2024 within reach for a typical household. This is very interesting given Victoria had the longest lockdowns. They also had a lot of people leaving Victoria because of those strict rules. So the fact that they were facing the worst in 15 years, again, just highlights how bad this situation is. A typical household was able to afford to rent 75% of homes available across the state in 2020 and 2021 without spending more than a quarter of their income in their lease commitments. For all Victorian rentals advertised over July to December 2024, they could afford 54%. And for low income earners in the state, less than 10% of rentals were considered affordable. That's still 5x what they were able to do in Sydney. And this is what I mean, is just by moving across into another state, and I know I'm making it sound easy, but if that's what you're really stressed about, is it worth losing your happiness because you just want to live in Sydney? You can always come back. You could also look at other options, like if I invest well over the next couple of years, I could potentially be living very comfortably in Sydney. Whether I own that or not, you'll still be in a more comfortable position if you take different routes to get to that goal. With Queensland, rental affordability has hit a record low, with less than 1/3 of rentals within the reach of typical household, the smallest share in nearly 20 years. A household earning the Australian median income of about $116,000 could access 36% of advertised properties. Now in January, Domain published the following chart showing how the proportion of income a median household needed to pay the median rent hit a record high of 33% in Q3 of 2024. Now, for anyone that doesn't understand what this means, it's trying to figure out what portion of your income has to go towards your rent. Now, traditionally, as an investor that's been in the markets for the last 11 or 12 years, if you found a renter that was spending more than 30% of their income, it was considered that they were a high risk and they would struggle to pay the rent. And you can see in the 20-year average, you're looking at 29%. But what we've seen is over the last couple of years, that number keep trending higher. And now, if we're looking at the median here being 33%, I can tell you now, I know people that are spending more than 50% of their income just to live in their rental property. And you might be one of those people that are listening, and it might not just be for your rent. It could also apply for your mortgage. So let's assume your household income is $10,000 a month. If you spend more than $5,000 a month towards your shelter, that means 50% of your income goes towards just holding the house. That could be as an owner-occupier or if you're renting that property. And that's why this graph is no surprise, which is the PropTrack Rental Affordability Index. What we can see is this is the worst affordability on record. And that graph is only pointing one way, which is down towards the right. And that's not what you want to see, especially with something like this. Now, I would go on to say that this is going to continue for the next couple of years and probably get a lot worse. I wouldn't be surprised if this number, which is sort of sitting at 0.88, gets closer to about 0.8, which is very, very scary if you don't own assets. Now, if you think about it, right? If you own an investment property and say you're renting, so a rent investor like myself, I have a couple of options. One, I could go and increase my income, and whether that's taking up a job that requires extra skills, I could teach myself those skills and upgrade. Or I could go and start that side hustle, which means maybe an extra $100 a week. Makes a huge difference, especially with something like rent. Or if I have my rents continue to go up, I need to think, if I go and invest my money instead of just buying a place, as long as my property is doing better than what I'm doing financially, externally, actively, then I'm still getting further ahead. And I'll show you an example. Now, if you think about it, if my rent goes up by $100 a week, that means an extra $5,000 over the next 12 months. Now, what happens in most cases is people will go, well, my rent's going to continue going higher. I just need to buy something. So what you do is you gather up all your savings, and maybe that's $80,000 or $90,000. I go and invest and buy a unit in a different area because I just want to live in there. Now, screw the landlord, because I don't need to pay an extra $5,000. I now have my own place. Now, with that place, I've had upfront costs, which means all my savings is gone. I also have the ongoing costs, like maybe strata if you're buying a unit. And then on top of that, I've got my mortgage repayments. Based on where we're at today, I might actually be paying a lot more towards my mortgage than I would be if I was renting. But I could go and tell myself I've at least got a property, right? Well, what happens if interest rates go up? And they could go up, although it's looking likely they might go down as the next move. What happens if it's just another unit in another area and it just happens to not grow for the next 5 years? Well, then what you've effectively done is used all your savings to put it into a property that you hope is going to grow, but now you've just got a mortgage repayment that you have to pay, you're living in an area you don't like, and you're effectively renting anyway, because you're paying to live in this place that's not going to grow anyway, which is the exact same as you renting. Now, what you could do, and this is what I would do, is I would go and use that money, invest into an area that makes a lot more sense. So if I live in Sydney and I can afford a house in, say, Queensland or in Victoria, I go and buy that as an investment property. Sure, there might be a negative cash flow component, but if that property, which is say worth $500,000, goes up by even 5%, which is really conservative, that means my wealth is increasing by $25,000 a year. Now, if my rent here goes up by $100 a week, that's $5,000 out of pocket that I'm going to be in 12 months time. but I have this investment property that's gone up by $25,000, and that's in the first year. This is how you have to think about it if you're a rent investor, knowing the rental market isn't going to change for the better. It's only going to get worse. What it does unfortunately mean for tenants out there is we just have to get used to paying a lot more for our rent. And instead of going, well, that's a really shit go, I should be able to buy property, you can still buy. You just need to find your way to get to that point. And that's why I would advocate to go and rent-vest rather than just say, I want to buy a place just because I don't want to pay rent because everyone told me I'm poor and like renting is dead money. No, it's not. If you do it the right way, you can get further ahead. And ask yourself, who are the people most likely to talk about rent is dead money, don't rent, you should go and buy anything you can? It's average people. Average people get average results. It's a complete section I have in my book, Retire Filthy Rich with Real Estate. It's available right now. It's a #1 bestseller and it did that in less than 2 months. There's a reason why people are picking up this book. And no, it's not because I wrote it. It's because there's actually stuff in there that resonates with all generations, and whether you're renting or whether you're scaling up a portfolio, it will still bring you a lot of value. Now, according to PropTrack, rents nationally have risen by 48% since the beginning of the pandemic. This compares to a 19% increase in median income over the same period. The situation is worse for younger and low-income households. Among 15 to 24-year-olds households, 84% rent, and among 25 to 34-year-olds, 56% rent. However, only 19% of rentals advertised between July and December 2024 were affordable for a median income between 15 and 24-year-olds households. And you can see this graph here. It's only doing one thing, which is up to the right. And if you're an investor, you would love this graph. If you're not an investor and you're a renter only, then yes, this is very scary because that looks like it's going parabolic. And what we've seen is during that time, what you did see was a lot of people get scared and sell out of their properties. Investors came and picked up some of those. They upgraded some of those properties and provided rental properties. But what you've got is far too many people coming into the rental market to rent a property, and there's not enough being produced or being available for people to rent as well. This is a pretty scary situation, and I know that the headline itself for the video is scary because this is the reality in Australia right now. And I don't say that to scare you or demotivate you. I say that to excite you. And I say that with tongue in cheek. What I mean by excite you is that this is a time for you to really take accountability. Because if you don't, you already know how this situation plays out. Rents are up by almost 50% over the last couple of years. Do you think it can go up by another 50%? Potentially. How do I know? But what I do know is that right now, if I take action and I do it the right way, I can growth hack my way into building a portfolio that sustains me and my family. I know people that have emailed me saying, Ravi, I'm out. I'm going to Bali and I'm living there. I can work remotely. Fantastic. And to those guys, I say kudos because now you got peace of mind and you get to live the life that you want. Now, I'm not saying everyone wants to do that. I definitely don't want to do that, which is why over the last 10 years, I've been going out there, learning as much as I can, investing as much as I can, and upgrading my skills because I know no one's coming to save me. So while you watch this video and you've got some value out of it, go ahead and click on this video because this is going to bring you a lot more value because I think you're going to enjoy it, and I think there's so much you can take away from it that it's going to help you take another step towards financial freedom. If you like books, definitely go and order my book. It's probably at Dimmicks or a local store near you. And this might be the 6th video you've watched of myself and you're like, I think I want to use their service as a buyer's agency. Just do it. There's a link in the description box below. Click the link. You'll talk to our amazing team and they're going to help you get started because there's plenty of stories on this channel as well as those that are not on the channel around how well they've done with real estate. I hope you guys have enjoyed this video. If you have, smash that subscribe button and share it with someone else that might be scared as a renter, but really it's a time to take accountability. I'll catch you guys in the next one. Thanks guys.